So again, just repeat, today we will do general market outlook as usual. As mentioned, Tuesday is good because you have Tuesday to Friday, 4 trading days out of 5 trading days to actually place your trades. Monday is usually not very good to trade because market just open. Even if you want to trade on Mondays, I would advise to trade maybe in the European or US hours. Asian hours are usually very thin in terms of liquidity. Most of liquidity is still in Europe and US compared to Asia. Unless you can trade Hang Seng in the morning. But again, tough day. Usually Mondays are tough days to trade. Tuesday more settled down, trends are clearer, news is out, so we will see. Let's look at a few things first. Usually, so a lot of people ask, hey, what's your routine? So I usually kickstart the day, very simple. We take a look at what's the headliners first. Although we're technical traders, so we trade indicators or we trade, EAs or whatever. We still need to be aware of what is happening in the world. So what's happening in the world today? If you can see my screen, it's not a secret. The headliners have been a few things recently. Definitely trade wars is one. And if you look, Elon Musk has been in the news for both good and bad. Excuse me. Over the last few weeks, there's been talks where Tesla is going private. After that, no. He went on some podcast and smoked weed in front of the whole world. So a lot of talks on him and his company. So Tesla, we one stock you want to look at if you want to trade volatility. And of course, if you look generally, I like to use CNBC because if you click at the top, you know what happened in Asia yesterday. You know what happened in US. US was down, but of course not a lot. But you see, the big thing is over here, Nasdaq down 1.43%. And if you look at Europe, a little red mix right there. Gold and oil and down, right? Down in a moment. So we will see. So you have a feel that, okay, equity markets are a little weak. Main headliners is a little bit negative for the markets, a little bit bearish. So with that, you sort of find some ideas in terms of fundamentals. Doesn't mean you just see this and you just went short. Doesn't mean this way. So, and then once you have all these ideas, you can take a look downwards where what people are discussing, the main ones. So nothing much going on. Tesla again in the news. See, again trade wars and the usual stuff. Not a lot of things going on over here. So the main game this week should be the trade wars. And if you look one more website, Forex Factory. This is to look at what is on the economic calendar. If you look at this, and I look at this week, you will find that there's really nothing really big at the moment except for maybe some of euros. It's mostly speeches and minutes. So you see there's minutes on Aussie, speeches, statement again. So I don't see a lot of, okay, there's a few, like there's a yen monetary policy, but that's not a big thing over there because yen monetary policy, they haven't been changing a lot. Swiss franc is out of the picture usually. So you don't have much things like NFPs or other central banks like Euro or ECB, BOE going on right here. So nothing really much as well. So generally, I think markets are focused on Trump's tariffs. So from here, I build a plan. I say, okay, maybe a little week. Then I look at the charts. I like to look from Asia in terms of equities. That's our equities first. You look at Hang Seng. After yesterday's headliners, Hang Seng get down around 200 plus points today. Right, candle is moving. The gap down. That's why Hang Seng is tough to trade overnight because you don't know the gap is going to gap up or gap down. I know some folks trade the gap. It's a highly risky strategy in my opinion. But if you know how to control it, that's fine. You go ahead. Most importantly, if you know what you're doing. I think this is the key message. If you know what you're doing and how to control it, and you accept the risk, then no issue with me also. So Hang Seng is down. If you look at H4, slightly negative. It's a little bit hard to trade, but if I have to take a position right now based on fundamentals and a little bit of technicals, I think H4 is still down. And you can decide whether you want to take any entries on H4. Let's not go to entries first, but if you're on parabolic, probably this is an entry right now. This is a stop loss. If you're trading this on the H1, H4, H4 is down, fundamentals is down. You have a trigger on parabolic whereby the dot initially price was above the dot. and now price is initial price is below. Initially price was above the dot, which is the parabolic star. Now price is below the dot. Okay, when price is below the dot, parabolic star means that it's time to go bearish. So in line with H4 trend, it gives you a place to put the stop loss as well. If you enter here, stop loss should be around here. Okay, so this is how we find trades: negative fundamentals, technical entries, plus risk management. This is almost a complete trade except for exit. So we'll not talk about exits today first. We will talk about a trade plan from looking at some fundamental news here and there, confirming it with the trend in the larger time frame, which is stage 4, step 2, and final step, look for technical entry and place a stop loss over here. So this is a typical day you wake up, this is what you should do. And if you look at the way I look at it, it should not take you more than maybe half an hour max to actually go and calculate stuff, read stuff, and come to a point where you just wait for entry. So half an hour in the morning, you have your coffee, take a look at the markets, and you should plan your trades already, right? It's not that difficult in terms of trading. But the difficult part is not this planning. The difficult part is, can you execute this planning as per your plan every single day, sitting down there again and again and again. So later I'll talk a little bit about manual versus auto as well. No right, no wrong. But I'm favoring a little bit more on auto right now. I'll explain to you why. So all good, right? The interesting one I'm looking at, just take a look just now, is Dow Jones. Dow Jones, I drawn the line, this is a H4 time frame. So you see Dow Jones have risen to quite a lot, right? Since maybe July all the way. There was a little bit of down over here. The last down wave was around here. After that, all the way up, and looks good in terms of the bulls. They have gained quite a lot. But if you really draw a line, I take away this. Look, if you draw a line, this was one key resistance. Last week, the bulls tried and break, and now we are below the last high. There's a false break over here. This is what we call a bull trap. Bull try and break, cannot make it. The bears came in and push it down. But there's not much confirmation yet, but I know that this is a false break over here. Number one, these are the facts. If you want to look at momentum, we are not kind of there yet. MACD is still positive overall, although it has cut downwards already, but it's still above zero. Still some. I can only conclude that number one, we failed the break. Number two, momentum on the bulls is decreasing. Right, you see the momentum decreasing as well. This is only what I can conclude, and we failed at the key resistance over here. If I was to draw a channel, I will probably draw it this way. Something like that. This is probably a channel you want to look at in terms of what might happen. Of course, if I have my way, I would not want to go long in this area where there's a failed break. I would prefer that we short to here, and after that, hopefully the break and we carry on from here. Right. So how do we take this trade? In all kinds, in all kinds of trading, there are high risk, low risk, and medium risk, all kinds of different entries. So the same trade, there's different ways to enter, different ways to play. If you are the super high risk one, you just short now, you put a stop loss over here, this is considered a high risk but valid trade at least. You can tell me I play on the failed break and the key resistance. Okay. But this is a high risk entry because the technical indicators have not really confirmed that yet. The medium risk or the lower risk one is probably wait for the MACD to come down, which price must come down a little bit more. Preferably go below this support. Once it goes below this support, I can also conclude that this is a double top. Once we go below here, I can almost assure you that once it goes below here, right, MACD will also go to negative. So you have double top, which is failed break, break below a key support over here, plus negative momentum. And I think that is a super valid trade in terms of shorts on down. And after if it breaks, then the next key over here, it breaks and it go down from here. So you can say also, people say, hey, this is all imagination. Of course, we need, but again, no matter you are in business or you are in studies, you work, everything, you need imagination, you need projections, you need um, anticipation. If you cannot anticipate movements, how will you know what to do if the anticipation comes true? So how I anticipate is, okay, now I have this, these are the facts. If this happens, I will take shots. If that happens, I will take this. So it's like engineering. If this happens, it's rule-based trading. You see, if this happens, I do this. If it doesn't happen, then I stick to uptrend. No? So for those who really want to trade this in a disciplined manner, currently it is still uptrend because strictly speaking, MACD is still positive momentum. No problem. You can do the uptrend, but you can skip also, right? So for me, I skip because I want to short as high as possible. So the moment it comes to here, and it breaks, and this thing goes to MACD goes to negative, everything is confirmed. I will act according to my plan. I will just keep shorting based on the shorter time frame entries, which we'll talk about later. But we need to talk about the plan first. So the plan is, if all this happen as per mentioned just now, I will short the markets as per my entries. If you have this in mind, you can actually have at least a plan where you know what to do and you're more relaxed in trading. The worst thing is you see something moving and you say, hey, how I don't know how to do it, how I didn't plan, I didn't look at it. And coupled with the tariff news on the headlines, this is what we try and couple fundamentals with technical. So the fundamentals is not good, obviously, right? This is not my website. This is obviously it's not good. News, right? If we look at Asia, I think it's mixed. Okay, mostly red lah. Somehow something is underpinning Nikkei. I guess it's the weak yen that's pushing it up. But in general, most of the indices are down. All red, you see. So this is my plan for Dow. Hang Seng already clear cut. I think it is a short over here. So we will see how it pans out. So all good on indices. Don't need to plan too many indices. Plan one or two is enough. You don't want to one short trade all indices at one go also. Okay. Now, for those who watched the webinar last week or watched the recording of the webinar last week, you will know that one of the key trades that I was interested in, I mentioned quite clearly and quite obviously that I'm looking at sterling quite closely. Okay. Last week, when we were at the webinar, we were around here. Right? And I say, hey, we are, I think maybe around here, plus minus. And we say we're trying to break this key resistance. So we go up, but I told them, I highlighted that, hey, number one, last week headlines, when we did the webinar, if you watch recording, it's about the Brexit having some kind of a deal or some kind of closure. I don't care what the details are, but it's positive news on the Brexit. Let's put it this way. Charts were nice. If I'm not wrong, you can go and read again. It was mentioning sterling was at a 5-week high. So I even draw boxes for you. This is 1 week, 2 weeks, 3, 4, 5. So sterling at a 5-week high. And I said, yes, it's high, but overall it's not high. If you look overall, sterling, is it high? When we were talking about it over here, it's not, I always tell people your monitor is your real estate. You can see roughly this situation, right? You will know that if you go long over here, it's not actually high, it's actually quite low overall in the last couple of months. And of course, we don't want to just go long blindly. I mentioned number one, positive momentum. Number two, positive news on the headliners. 3, all the entries here are all very nice. So we see when you're with the trend, you are with the news, right? A lot of things become easy and it's a breeze. A lot of people text me and took the trade. Congratulations. Again, it's not about me giving my personal opinion. It's about you having the strategy, the courage, taking the risk to take the trade. So you do the trade because I cannot help you do the trade. So I'm only sharing some ideas and how I look at the markets personally, right? So let's discuss this because it's a textbook trade. I repeat again, just for the sake of education. Last week, how do I know sterling have a chance? I cannot say that guaranteed. How do I know sterling has a good chance of appreciation maybe against the dollar? Number one, headliners were mentioning sterling is at 5-week high. There's some positive in the Brexit deal going forward. Number one. Number two, we see the indicators showing positive momentum, which is good in the 4-hourly time frame. Number three, just take all the entries that are bullish and they are good. So let's take the chance to discuss on step 3 when we talk about entries. Assuming that, let me just add in something for you, a little bit of bonus. Sometimes I like to add in Bollinger Bands. Okay, standard setting, don't need to adjust too much. There's 2 ways to enter based on parabolic star. Number 1, these are all the bullish entries, right? Even yesterday also had entry. Here also have 1 entry, but false one. The bullish entry is when the dot flips from on top of the price to below the price. That's why I see these are areas where the dot flips. And the dot flipped. Yesterday, nice entry over here, right? So assuming that I give you the crystal ball, there's 3 entries over here. You know, when we design strategies in terms of as traders, we come up with new strategies, new EAs, new things to counter the markets. We always need to see how markets react to certain indicators. So 1, you can take the flip. The moment you flip, you enter, no problem. But you realize that when you flip, you enter at these kind of levels. This is 1 level you enter at. This is 1 level you enter at. This is also 1 level you enter at. Okay, and this is also flip is here. 1 level you enter at, which is this is a false break. Now, the traditional way of entering is the flip, which is entering these levels, right? Stop loss just below the dot of the flip. So you enter here, you will exit over here because the next flip you will exit. Enter here, exit here. This one enter here, stop out here. Enter here, exit here. Visually looking at it, overall you take 4 trades, you should be profitable and you are with the trend. So the question is this: entering here is considered not too bad, but not ideal, but safe. Safe because I have a stop loss, right? Traders will always ask themselves, is there a way when I want to go long, can I buy lower? Can I buy lower? Can I buy lower? So the question of how to do entries will come in more and more. So we have 1 kind of entry which we discussed. The second kind of entry is you can enter also when during retracement. This whole area over here is what we call retracement, right? Because you want to do longs, all right? You want to do long. However, the parabolic SAR is above price. So this is parabolic SAR tell you not yet. So if you want to do enter during retracement, you can use the Bollinger Band to help you. You can enter when price touches the Bollinger Band, and you will sort of bargain by better price than here. But you will find that there's trade-offs, because in this profitable trade over here, if you enter via the Bollinger Band, this guy didn't touch. So no entry over here, but went up. Then you say, missed. During retracement over here, touch the Bollinger Band over here. This one, you didn't gain much of a discount. So sometimes you gain discount, sometimes you miss a trade, sometimes you didn't. So the pros of entering using Bollinger Band is, hey, I get a better bargain. I can enter earlier. But the bad thing is I may miss some trades. So again, I'm trying to share different kind of entries using the same indicators to help you. You can also use, for example, okay, during this part, I don't look at any of the Bollinger Bands, I don't look at parabolic SAR. You can also use the MACD itself. Whenever the histogram cuts up here, you enter. Cut down, exit, cut up. You can also use the cutting. So it depends on really yourself what you want and how to do it. But when you play this kind of cutting, I give you a bit of caveat first. When you do cutting in terms of indicators, there's a few things. Indicators tend to be lagging. So when this is forming live, you will do that kind of, or maybe cut up, maybe cut down, that kind of thing. You see over here, this is the areas that you find very difficult as a trader to think it's cut up or cut down, very difficult. So probably you have to find the ones, there's no right or no wrong answer. You have to find the best way that suits yourself in terms of your risk, your character. So, and in this cut up, cut down, you have to subjectively, let's say for example, let's say you say, okay, this cut up. you have to, there's no visual stop loss except for the last low over here. So if you want to enter, let me just take the box away. Let's say you enter around here, based on the cutting up. I draw a line for you. Here. Let's say entry is here, based on this cut up, you enter around here. You have to visually and manually know that this is the last low, and you place a stop loss around here, and you take the trade from there. And you also can use the cut down, which is around here, to exit. So you will make a profit of here to here, around here. So this is your profit. Okay, your profit is here. I'll just visually show you how this is your profit. And this is your risk. Risk is here because from entry to last low stop loss, profit is here, which is good. And this is how we will make a complete trade from entry to exit, from looking at news, looking at other time frame trends, finding entries with technical indicators and everything. And you need to keep repeating this regardless whether the trade is good or bad. Because this is the way you have trust in your strategy, right? Actually, a lot where I just had a meeting last week with some traders, personal meetings, just discussion. And we concluded that actually trading is a statistics and probability game. It's never about the strategy. It's about the statistics of the strategy. So whenever I say I trade this way, by doing the statistics, sometimes it's tough to actually use it as well. And that's why now a lot of times we use, this one you can trade manually alone for passion, for hobby. But sometimes we have serious funds coming in. We do not trade this way because someone is too manual. So we do not, I can't stay glued. Let's say, for example, there's funds coming in and we need to manage that kind of funds. We can't do it this way because we simply don't have the capacity to sit down there and wait 24/7 and to take every single candle from manually. So this kind of trading, I would say, is basically part-time, leisurely, hobby trading. You feel the thrill of trading. You love the fact that, you are right when you make a good trade. This kind of thrill. But if it's a lot of big funds, a lot of, I'll answer the question in a while later. If you have very serious funds, you have to look at very, very huge statistics and crunch statistics on whether how to deploy that funds. I'll talk about that later. But I think we covered equities, we covered sterling in terms of the situation, how we do the trade, and how we take the entries. Now, so back to analysis. Let me just clear everything up so you can see clearly. Sorry. So if we look at sterling, I think it's still bullish. You see this whole chunk over here, MACD is still good. So we will stay the trend until it ends. If you're technical indicator, I think you just trade the longs for now. Sterling yen, another star. Again, last week we were around here and we shared. I used a few pairs of sterling to show the strength. And after that, it rallied from here. Congrats, I think some of you took this trade as well. Sterling yen, straightforward trade again. Currently, of course, still bullish from here. All right. Sometimes trading is very, the more trading you do, the less analysis you require. Because why? You've already analyzed last week. This week, your trend never changed. You just continue. Correct? Not like Dow Jones, potentially trend might be changing over here. Okay, simply because I see earlier that based on the price action and based on the resistance and false break, things will be changing. So this is what I call anticipation. But these two clear-cut trends are still strong upwards, so you just do follow the trend. Oil, still in this kind of zigzag manner, it's still hugging near around 68 plus minus to 70. To me, it's 70, like wrong figure, plus minus. It's still hugging that kind of ranges. As I mentioned, my drawings are still there. The key will be whether you can really fall below these two trend lines. If we can fall below these two trend lines, this will be our classic head and shoulders as drawn over here. Shoulder, head, shoulder, and it'll be all shorting from here. So I'm waiting for this to happen, okay, before I really take a serious view on this. Euro sterling as well, clear cut, still down. I think sterling is stronger than euro at the current situation. So clear cut is still down. Again, this whole chunk of MACD seconds the idea that it's still down. Okay, so this pattern short. Again, sterling showing some strength. Dollar yen, I mentioned last week also, right? You see it came through. You see the drawings. This is the channel that I drew. Okay, I said this is a potential bull flag. And I said when you break out over here, there's potential. Indeed, it break a bit later in the week. From here, you see more drawings. And it really broke out to our side. I'm not very sure whether people took this trade because most of the replies that I had was on sterling yen. Sterling yen and sterling dollar. Right? Gold. Gold is tricky. Similar pattern. You see this pattern is similar as dollar yen, right? Similar. But I think gold a bit more tricky because it went up, it broke as you see, as I expected, it broke, but not enough strength, it came down, and we'll see again. But as of now, I may still go for one because this one very difficult. You see over here, the MACD doesn't seem to know whether it's up or down, not very clear over here. I'll wait for a clearer move, but my bias is still, I think, upwards from here. My bias is still upwards from here simply because of this overall bull flag. You extend this one, you see it resting on the broken trend line right now. I hope we can move a little bit upwards on the histogram, take some moves over here, confirm the move, then I'll take the longs in a small time frame. That's why I favor a direction, but that doesn't mean I trade it now because I still haven't have confirmation yet. Okay, so overall I like this pattern, but a bit tricky. It's also hugging, another reason is because it's hugging a 1002 level. 1002 is around here. So you see, it's trying to whipsaw around the 1002 level. So the bulls and bears still undecided. Let the bulls decide, push it up a little bit more. MACD comes up, and from there, I think I'll be more comfortable taking longs from there. All right. The pair I'm looking at this week, again, this one is critical. Is Aussie versus US. I know Lindy has a question on Aussie Sing, but so let's look at Aussie versus US dollar first. Take away the pair, take away the Bollinger Band first. Okay. So you will see again, let's zoom out. Aussie has been down. All right. Actually, since April, overall is down. So I can conclude this is low. We need to tell ourselves facts first before we anticipate and project what we want to do. So the fact is low. Any arguments on this? Aussie is low. Any argument? No argument, right? I think generally you won't argue on this. I can do a D1. Even worse, if I do a daily time frame, it's been low since like last year, this year, February, January. So the whole year Aussie is like, taking it down. So why I'm interested in this pair is because it just, you see the MACD, just turned positive these few days. From maybe second half of last week to now, a little bit of daylight over here in terms of MACD. I'm not confident of the whole thing yet, but there's a potential bottom picking over here. You have a trend line over here. Okay, you have an up move over here. So to me, this is an up move. This is a good price spike. Pull back over here with a resistance or trend line. MACD is positive and price is very, very low. There is a critical line over here. Let me take out the rest of the line so they can see clearly. The critical line over here, because there's some support over here, and it is supported over here again. If it comes through, then this might be a short term, I'll say short term, not longer term. Longer term is still down. I would say potentially there's a short term inverted head and shoulders, which is a bullish pattern, but needs to be confirmed by a break of here. MACD is already positive, so one sign is already good. Actually, there's two signs already good. Number one, this previous support hold, which is good. Second, MACD is positive, also good. Third, we're waiting for a third confirmation where we want this to be broken upwards, and from there, you can take your trades in H1 upwards from here. So again, I'm personally, I need to keep mentioning the word personally because these are all personal opinions. This is not financial advice. I'm just sharing how I look at market analysis and how I trade. So I'm anticipating personally of this kind of move in Aussie. If I'm wrong, Aussie comes down to here, then this whole setup is invalidated. Again, I don't have any position on this first. I'm preparing for positions. Because why? I want to wait for, I have already a few clues that maybe you see potentially this thing might happen, right? Inverted head and shoulder support, and then I've already finished my analysis. But I don't want to commit yet because I'm waiting for final confirmation where price must go above this trend line. And from there, I take the longs over there. So I'm prepared, actually. I'm prepared. that once Aussie make the move that I anticipate, I will enter based on my rules. So again, in the webinars, webinars I think is very good because it's recorded. So, and we post it up online as well. So my personal opinions can be validated, whether you know how accurate I am, how I do my analysis. So no hindsight over here. Again, no hindsight because the Sterling one definitely no hindsight. Gold no hindsight. A lot of things no hindsight. All right. So if it's a stop loss, it's a stop loss. But at least things are real. Things are for. I don't like to do things when you know things are always on hindsight. That means see last I told you already. See this thing move. But the told you already, these three words is actually very critical. The how this told you already, when it was told, how it was told, how it was presented is very important. So I try to present to you my own trade setups, how I want to look at the markets, and you validate from there. So you have a few, we've gone through most of the Forex pairs. Let's look at some of the questions. Let's look at one by one. Aussie Sing first. So that's Aussie Sing. AUD, SGD, that should be this pair. Yeah, Aussie Sing. Similar situation, I think it's almost a photocopy of just now. Again, down, you have a support here. And it seems like you have another support here. And you have good momentum in MACD. So I can't comment in the 6 months or no 1 year kind of situation, but short-term trading, as asked by Lindy, right? I think it's overall, I want to go for bullish setup from here. You see the way I draw, it's obviously that it's not by chance I trade. It's obviously that we have been trading for many, many years, and you can draw as fast as me, very comfortable in doing a lot of things, right? So if you're not really accustomed to looking at the pattern so fast or drawing, trust me, it's not by chance. It's just a matter of time. It's like golf. You need to hit enough balls, practice enough to draw as fast. Again, I don't want to commit to this pair immediately. I want it to break first. Once it breaks, I'll take all the longs from here. So that's for Aussie Sing. Again, the question how to achieve consistent trading skill is very clear cut. I've given you the routine. You see, it looks easy, right? When you say, wow, timing quite easy, you just look at this, look at that, draw, then can come up with the trading plan and take some trades and make some money. But to come up with this, there's a routine. The key thing is here, some people who are working, wake up every day, rush to work, and they are stuck in work. So this routine cannot be practiced. Some people, we in Chinese, we call 3分钟热度. Suddenly watch this routine and they go and do. They do a few, maybe just based on luck, not so good, because the markets were not favorable, not much trends. Maybe they lost a little bit of money and they said, yeah, trading is not for me, I give up. So consistent trading still needs consistent habits. If you ask me a very direct question, if you consistently do the same thing over and over again, right, then you can see some statistics, some patterns, some probability, and then you can adjust from there. If you do not have any statistics or probability on certain things and you cannot accept bad results, then probably you can't really trade that much, right? The copy trading for working people, how to choose trader later. Okay, later. But in terms of we finished market analysis first before I answer the last question on. I think that question is more of a statistical question. If you say how to choose a trader, whether for busy or for non-busy people want to choose a good trader, let's put it as that. So it doesn't really work the question is not really for busy working people only. It's in general for investors who want 8 hours, consistent gains, low volatility, that kind of thing. So I'll share with you a little bit on that in a while. But let's complete the session on market analysis first. Any more pairs you want me to look at? Actually, I'm quite interested in Tesla stocks. It's moving quite well. There's a lot of move in Tesla. Overall, you're down here, your pullback over here, MACD is still down. Probably, based on the MACD, I will prefer shorts going forward for Tesla. And the news coming out from the headlines for Tesla hasn't been that good over the last 1 2 weeks. Elon Musk smoking pot, a lot of things not doing too well for Tesla. So overall, as long as MACD remains pinned down, I will prefer shorts over there. Any more questions on market analysis? These two pairs is good enough, honestly, for you to trade away our things. Okay? Anything? Euro yen also my favorite. You see? Again, the drawings we went through last week. Seems like a bull flag. It broke out again. If you would have made some money over here. That's why the webinar I try and record as much as possible because you really can know that we can so-called predict or foresee the markets to a certain probability, right? If nothing, let's just spend maybe 10 minutes and share with you some of my FX book statistics. Give me a minute. So again, if you watch, I hope you watch the webinar in sequence. If you watch the webinar last week in terms of recordings and or live, you know that I shared with you how to actually select the traders. If you really want to, like what Lindy asked, select something more comfortable, you probably select traders like this or traders like this. Let me show you the difference between these two. Now, everybody wants to preserve capital, consistent gains, no volatility. In fact, this is the dream, all right? No capital loss, consistent capital gains, no volatility. This is the beauty, the ideal case of investing, right? But it's impossible. So the key is here. Let me share with a few tips. Let's take away all the gains and everything first. Let's share with you a few. I need to, maybe it's a bit repetitive from last week, but let me share with you a few things first. Number one, when I look at a trader, okay, it must have statistics that and maybe at least 2 to 3 years. Right? So for this case, this guy got turtle, right? Turtle, 3 years. A lot of folks maybe like to buy some software online, attend some courses, few $1,000, do a lot of things, design their own strategies and everything for fun. I'm talking about retail. I'm not talking about the professionals. I'm talking about retail. The retail like to do this, do that, attend courses, get some new strategies. But you find that retail doesn't really look at statistics. 2 reasons personally I feel why they don't have statistics. Number one, no access to statistics. They don't know that there's such websites like MyFX where they can really go and look at statistics and select some good traders and everything. So number one, they don't know. They don't have access to the statistics. Number two, or actually 3 reasons. Number two, they have statistics, but don't know how to read. That means statistics, wow, you show me this website, have so many numbers, where do I look? They don't have. They don't know how to read. Number 3, those who have access and know how to read simply can't be bothered to go and crunch statistics. Lazy. Don't want to crunch. If you don't want to crunch, very tough for anybody to help you because you refuse, correct? So one of the traders that I personally use is this trader called Turtle Trader. There is statistics. Good. Every month, make some money. Generally, no problem. The next thing I'll look at is he has high success rate. Every trade around 80-90%. Not bad. Positive expectancy. That means every trade he takes, we are expected to make around 5 pips on average. And based on the history, we can look at the trades. Let me take away those that don't want. Based on the trades, consistent. He trades mostly the dollar pairs. If I randomly click anything, usually the dollar pairs, trade size about the same, and he places stop loss. Right? General. So this is the way a simple, of course we need to, this is a very simple way, but at least there are a few key checks or key flags that he has passed, that at least in terms of returns, he has 3 years of at least consistent returns, right? He trades consistently in terms of his pairs, correct? And he does his risk management, system is positive expectancy, accuracy is there, and every day he closes all the position. So he's intraday trader, average trade length, 10 hours, right? So these are the few things as an initial check, I think is good. So if you do not really go and check, let's say for example, a lot of people ask, the first question I ask people when I discuss things like, hey, how you trade now? Then the person will say, yeah, I do this, I do that, I do this indicator, like that's not how I show you how I use Bollinger Band entry, and then they show you this, no problem. But so that I asked the next question to this trader. So how long you traded? He said, just started not long, but this new strategy I think so far not bad. The so far not bad gives me a lot of red flags because This person puts real funds in the strategy he just learned with almost no statistics. And so I ask him back this question. Now you have one sum of money, limited amount of money. Do you want to put your money in a strategy or investment or trading that has statistics, or you want to put this limited amount of money in something that you just has no statistics? I think it's best to put at least in the one that statistics. Although history cannot be as a forecast of future, but at least there's history for you to as a reference point whether this guy is good or bad. It's a reference point. If you do it yourself, trading you try and do yourself here and there. Or sometimes you trade, sometimes you don't trade. Sometimes you do this, sometimes you do that. No discipline, no statistics. You never, even you have statistics. I know some people who trade for some years, but they really don't bother to go and look at their trading records. What is good, what is bad, what went wrong, and how thing. Also, no use. So you might as well, you're better off just having so my advice is having a small trading account manually, you do yourself, and the other one, you bet on statistics. I think this is the future where we have big data, we have artificial intelligence, we have a lot of things going on in the world right now. We have robots going right now, AI. Some may argue it's not mature yet, but again, this is the way to go. If something is totally mature, then probably we don't have any money to make anywhere. So times have changed. A lot of people trade manually last time, but you cannot beat the high frequency trading people. The banks are using HFTs, very, very fast computers to analyze the markets, big data. So as retail, we need to also crunch some simple numbers and look at some simple indicators, some criteria ourselves in terms of their past performance and their trading patterns. This is the least we can do when we want to trade. Because we ourselves, if we trade, we don't have this kind of length of data, like 3-5 years of data to analyze. And the 3-5 years of data is not put into this nice format for us to see also. So your 3-5 years of data that you trade on your own, maybe it's all in the MD4, you need to download history and all in numbers. You can't put it in really chart and everything. Even if you can, you probably don't have the time to do so. Okay, so these are all traders. And again, this way of analysis or criteria selection for traders is very simple. Let me share with you something that is more difficult to analyze. If you look at this guy, called Scorpion, I like all the animals. That's why all the animals are quite good. Look at Scorpion. Overall, is he impressive? You say in Guangdong, we say Bamatea, so. Why? Sometimes win, sometimes lose, sometimes win, sometimes lose. This is where what we call actuaries and people like me, engineers or people who are mathematicians or very strong in maths come in. I look at this trader. This is really giving out free information, a free one. I look at this trader, right? And I see he trades gold and the dollar pairs, right? So generally, I do not like the fact that when people mix gold and the pairs together. So what I do, my FX book allows you to customize analysis, and I take away gold and then analyze, which means that I only want to see the performance of these guys FX trade. I filter and wait, is it done? And voila. Hey, not bad what? One losing month, 11, okay, not this is not a full year, sorry. You have 9 months, one losing month. 2017, overall not bad one. If you take a summation of all the winnings and losing, there's of course a bad months, last 2 months of the year. But overall, just my visual inspection is positive, not bad. All right, 1.6, all good. So you have almost 2.5 years to 3 years of data. This guy trades consistently. Again, only dollar pairs, very liquid, very consistent. All got stop loss, trade size is good. So sometimes crunching data is not so straightforward. Oh, I just on the trader, I just see. No. In fact, I haven't shared you 100% of how we test traders. The key is being able to identify what he trades in terms of history in correlation with the results. You need to be able to crunch numbers in this area first, which is not easy because you see there's a lot of numbers, a lot of trades, a lot of pages to scroll, right? And this is just hypothetical. I assume the results are good. I still have to run it on actual systems to make sure that the execution here is what is or it's near to execution in the real markets, right? So you see, if I take this guy's FX pairs, I'm good. So what I'm doing is that I'm only copying these guys' FX pairs. Now, let's look at these guys go trade. Only go, XAU USD, just go alone. Okay, let's see the performance. And you see, wow. So gold is the one that's really killing this guy. Hey, don't draw my chart, please. Don't draw my chart. Let me remove all the things. Please don't draw my chart. Huh? So you see, this guy's gold trade. Not good, right? Wow, lose 70% of the account in August. There were 8% plus in 2017. So not so good. So you see, the gold, this guy doesn't trade gold well, but this guy trades forex well. So overall, I think it's good. Correct. A little bit of sharing again. Let's look at this guy's forex again, because this is what we want from this guy, right? You look at the forex pairs. There's a few ways to copy this kind of people. One, you copy exactly how he trades in terms of all the. Let me see. If we take 1 micro, take 1 micro, you can copy, and you should get near his results. The other way is you also can switch this to number of pips and copy in fixed sizes. So if you copy, let's say 0.1, which is 1 mini, this one you earn $700. So because 1 mini is $1. Correct? So there's a few ways to copy also. Again, this is quite advanced. So it's not so easy to know when we use pips, when we use percentages. Again, if you want to know all these things, you can contact us. We will assist one-to-one on how to do. Lindy has the last question. How much capital you suggest to start copy trading? I think if you can afford it, you should do $10,000 and split into maybe 2 traders as a start. I mentioned in the last webinar, you need to watch again that a lot of people, when they copy, they expect the first month they copy is a winning month. There were people who copy this guy maybe end of the year, in the last few months of the year, last year, right? And you see, it's not good. And they say, wow, this trader is not good. Then they will stop copying, even January to lose money. They will stop copying, and then after that, pop, all the money came back and plus profits. So I would say if you want, you diversify between at least 2 traders. You give them about 5,000 each to try. With money you can afford to lose. How I personally do, okay, this one is general one. So the 5,000 one is general. So your holding period is, well, I think 6 months is too short. You must hold at least try for 1 year. Win or lose, you try. Then you really see the distribution of the results. Right? There's something I do for my own. I haven't done it for anybody yet. If anybody wants to do this, he should at least have 50,000 US dollars at least. Then I can set a particular thing. So what I do for myself, for big amounts of money that we have in the company level, is that $50,000 I will split into 50 different tranches. That's why I don't do this for other people, because it's very tough unless it's really personal private arrangement. I'll have a specific laptop for you, just for you in the servers, and we'll host it for you. So what we do is I have $50,000. I will split into 50 tranches. There's 20 trading days a week. There's 20 trading days a month. So every day, every single day, I will add $1,000 to my trading. So for example, let's say I trade $1,000 and I trade and I trade 0.05 lots, which is 5 micros. All right, $1,000. This is the ratio. On second day, I will put the next 1,000 in and I will trade 0.1. The third day, I will add another 1,000 in and I will trade 0.15. This is to enable us to diversify the risk across the board. So that if any day is a bad day, then some of the funds avoid the bad days. Again, some of the funds also avoid the good days, but at least it smoothens out. It's called curve smoothing. It smooths out the curve. So for people, let's say we have 100,000, then we split across 100 trading days. So the funds only get fully invested. Let's say you have 100,000. The funds only get fully invested after 5 months, because every single month you have 20 trading days. So every single month you only invest 20,000. So the curve is actually very smooth. It will take 5 months for this 50,000 to be 100,000 to be invested in. Yeah. To do this, I think minimally you have 50,000, because it's just too cumbersome. Every day you must adjust the settings, and add the number of lots in the servers and everything. It's a bit cumbersome. But I think it's very rewarding. because for such arrangements for myself, I will do it on the most high risk strategies. For the lower risk one, I will just advise I put one sum of money like 10,000, 5,000, you just put it there and just leave it to the traders to do. But if you have a highly aggressive appetite and you want to do this in a very disciplined manner, so you see, I repeat, high risk appetite, but low risk approach. If it's a normal gambler mindset, he has 100,000, what would the guy do? This one high risk, high return. Okay, all 100,000 just go. You cannot do that. You need to run a business. So assuming this business, you want to enter in the business that is high risk. You know that this business is high risk. And you have 100,000. You would thought I will enter this business progressively. 1,000, 1,000, 1,000, 1,000. It's like going casino. I don't do 100,000 one bet. I do 1,000 100 bets. So with that, I have a better chance, because it's a high risk strategy. So any of my bets hit a good run, I can get back my capital very fast, you see. So if I'm lucky, let's say I'm lucky, I can actually make back quite a lot of money the moment I add my first 1,000 in. Of course, you will say that if I put 100,000 in, then it gets even better returns, right? But your risk is very high. Let's say I hit a bet streak for 1 whole month. I only strike the bet streak in 20% of my capital, which is the 20,000 or the 100,000. That's why for this kind of way, that's very troublesome and but very, very rewarding. It has to be bigger funds. We don't do it for you. Just tell you at $1,000 and do $10 a day. Nobody will do that for you, and the sizing can't be done also. So probably for people who have 50,000 to 100,000, this is a very, very good way to really go for high risk strategies, but in a very, very disciplined and low risk approach. So again, high risk but low risk approach. I think it's very, very good. So far, this has yielded the best for me, even though I hit some bad streaks. But the bad streaks only constrained to a certain time. Let's say I hit the bad streak over here. So only a part of the capital gets hit, and it's not hit 100%. So you have some losses over here. But after that, when you hit the good streak over here, right, you still get your funds in, and everything is good from there. So almost time. I think I've answered most of the questions. Hopefully you learned something. Again, if you want to know more specifics on how we do, just contact us, contact Lindy, contact me. You'll find that there's a really big a lot of ways to do the same thing. Depends on really your appetite for things. But I think going forward, manual trading will be a thing of the past just for hobby's sake. So even like for me now, I still manual trade. That's why I can talk the markets very easily. I still trade, but maybe just one account for fun. When I'm right, I feel the thrill. That's about it. For serious funds, I need some serious statistics to crunch, and I just follow statistics from there. Okay, so we'll do the same thing next Tuesday again. I think Tuesday is a really good day. Not too bad. We're 30 to 40 people in the room at one point on our office hours. Apparently, a lot of people don't work as well. So, and we do have a lot of people watching the webinars on the recorded sense. So I think that's good. If there's no final questions, thank you very much. Contact us. Contact Lindy better. Contact Lindy because I'm quite busy this few months because there's a lot of projects going on. Contact Lindy for any questions if you need. Okay, Ken? If okay, thank you very much. We'll send out the link for the recorded webinar again so that you can watch it again. And if you need help, let me know. Okay, thank you. Bye bye. Have a good day.